Hello, it's Tuesday the 22nd. I'm FX Plu. I'm back beneath the brolly yet again. So earlier this year, the rising oil price was a bellwether suggesting the recovery was beginning and that inflation was going to rise. Now we have analysts calling inflation up to 4% later this year. 4%! Economic historians, or indeed those old enough, will remember how the chancellors in the 80s and 90s would have dreamed of that kind of price growth. But we're in a different world now. Ultra-loose monetary policy has been a mainstay for so long. And with the Fed, the Bank of England and the ECB all queuing up to taper bond purchases as a first step towards a rate hike, the key question remains whether such a spike in inflation is going to be an issue. Sunak certainly isn't out the woods just yet. It's worth remembering that despite all the positivity around the recovery, the service sector makes up 80% of the UK economy, and that sector, especially hospitality, is still crying out for support. Ending furlough will be a delicate matter that could still tip the economy into recession, regardless of the rate of recovery and the pace of economic growth. Meanwhile, sterling recovered a little ground lost by the dollar rally after the Fed meeting last week. We climbed back to 139.35 yesterday, ahead of the MPC meeting tomorrow. The US recovery is still a little bumpy, to say the least. Biden may still upset Republicans even more by doling out yet another round of stimulus checks. $422 billion was set aside for support, and 395 of that has been paid out so far. But many will be hoping that Biden will spend the remainder more wisely than another cash giveaway, especially when he will have to tighten the country's belt in due course. But that won't be until the economy is standing on its own 2 feet. Powell may have started the discussion about tapering the support, but he remains determined for the recovery to be strong enough and reliable and robust enough to be relatively unaffected by any policy change in due course. In the market, the dollar index gave back some of the gains triggered by the Fed meeting. We dropped to around 91.90 and euro dollar recovered to 119.20. Perhaps the market is taking a few positions expecting the MPC to follow the Fed with a more bullish reaction to that inflationary threat. We'll find out later this week. Right, that's it from me. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.